Hey, this is Awais with eMiniPlayer.net, and this is a recap for Thursday, November 30th. So heading into the open, that bullish time frame alignment was still in play, and off the open, how the market responded to the 33 to 34 quarter zone would help set the bias for the day. So if we could get a breakout beyond 33 to 34 quarter, it would serve as a bullish confirmation, and then we could reach 39 to 41, and then above that, if the market was running on above average volume and we were seeing sustained upside momentum, we could even reach 48.75 to 50.75, which would be a range extreme and a very good spot to take profit on the day time frame. In the event of a failure at the initial resistance zone, we could still get buyers active at pre-market support 25 to 27, as well as the initial support zone down at 1975 to 22 quarter. But given the bullish time frame alignment, our primary scenario was to look for an upside move beyond initial resistance, at least into 39 to 41 and maybe even higher, because above 34 quarter there is no hard resistance and the market would be making fresh all-time highs. So how high it goes beyond 34 quarter is really going to depend on the momentum and the volume that we see in real time after the open. So that being said, let's jump into the chart, see how it played out. So in this case, we can see that the market actually breaks out ahead of the open, and we get that bullish confirmation even before the market opens. Now in this case, because we have that bullish time frame alignment, you can enter long even ahead of the open. But if you haven't already done so, then when the market pulls back towards 34 quarter, that is a time when it makes sense to be willing to be a little more aggressive and jump in ahead of the zone. Remember, when you have bullish time frame alignment, you should be willing to be more aggressive on the long side, which means that you don't have to wait for the perfect location, especially when the market has already tipped its hand and confirmed that the buyers are indeed still in control. And also keep in mind that this is still in the early phase of that bullish time frame alignment. So this bullish time frame alignment triggered 2 days ago when we got the strong breakout up to 26.27. So it's still in the early phase. And we know that as long as the market's holding above 33 to 34 quarter, then 39 to 41 is the high probability objective, but the S&P doesn't have to stop there. And it could go higher into the 48.75 to 50.75 zone because the market was running on above average volume. So when the market's running on above average volume, we tend to get a bigger absolute range. So the 48.75 to 50.75, although it's a range extreme, because we're running on above average volume, it is within the range potential of the day. So one of the big lessons from today is that when you have this bullish time frame alignment, which is a very unique time in the market, and it doesn't happen that frequently, but when it does happen, you want to be very careful on the short side, and short setups can even be completely off the table. But think about it. If we're being so careful on the short side, then shouldn't we be extra aggressive on the long side? Right? It's the same idea. If you're being super careful on shorts, then you should be more aggressive than normal on longs. So that means that in real time, not everything has to be perfectly lined up in order to consider taking a long setup. You can lean on that 33 to 34 quarter zone, and when the market pulls back and gets close to it, that's good enough. Don't wait for the perfect price. Be willing to buy at 35 or even 35 half and just use a 3-point stop. So if you're going long at 35 or 35 half, you can have your stop down at 32 or 32 half. That's a safe spot to have your stop loss. And then on the upside, if the market even moves 6 to 9 points, which it could easily do, you end up getting 2 to 3 R out of it. Now, no one could have predicted that the market would go all the way up to 58 half. And you don't have to capture the entire move. If you can successfully capture even a piece of this move, that's going to be good enough, because a day like today doesn't happen that frequently. Today is an outlier type day. We ended up with a really wide range, much wider than expected, and that's not the norm. That's not the typical day. So you don't have to predict that the market's going to go all the way up to 57, 58. And that's why even if you chose to take profit around 50, 51, or around 51.75, which was the 100% range extension of the overnight range, that would be perfectly fine. When the market's making fresh all-time highs and running on above average volume, no one really knows exactly how high it's going to go or where it's going to stop. So just try to find an exit that's good enough. And the main thing is to be involved in the move to begin with. So in the morning, when the market's allowing you to get in around 35, 35.5, that is the time where you need to be more aggressive because of the bullish time frame alignment, and then hold the trade for an intraday balance breakout. Again, it doesn't mean that you're going to hold it all the way up to 58, but you could hold it up towards the 100% range extension of the intraday balance, which is 47, or into the 48.75 to 50.75 range extreme area. That would be perfectly fine. So the main trade idea today is to either already be long ahead of the open on the breakout that happened in pre-market, or be willing to buy when you get this pullback towards this zone, because as long as the market's holding above 33 to 34 quarter, then this breakout that happened in pre-market is still intact and the buy side is still in control, and we have that bullish time frame alignment which calls for being more aggressive on the long side. So that is how today ended up playing out. At this point, heading into overnight and heading into tomorrow, we have to be mindful of the fact that the market has put in a very extended move to the upside, and given that tomorrow's a Friday and we're heading into the weekend, the market could just consolidate and balance within a range. So like I said earlier in the video, in the early phase of time frame alignment, when the market hasn't really put in a major move yet and it's still early in the development of that upside move, it makes sense to be super aggressive. But as that move matures and the market gets overextended in one direction, then you want to pull back a little bit and start being a little bit more careful even on the long side. So heading into tomorrow, we understand that overall buyers are still dominant in control, but because the market has put in such a large upside move, and because we're now starting to see some red flags, for example, the Nasdaq hit its own resistance and then failed and pulled back. The Russell put in a marginal breakout attempt and it actually ended up being a completely failed breakout attempt. So we are starting to see some cracks in the foundation here, and you can see that even on the daytime frame, we ended up reversing from 58.5 all the way back down to the intraday breakout area at the first hour high and the 24-hour mid. So even though the morning session was really strong, the afternoon session saw a lot of selling and profit taking. So at this point, heading into the overnight session, we'll be watching to see whether the buyers can hold ES above 38.75 to 40.75. That would tell us that the buy side is still in control. In the event that we break below that area, we could pull back to 33 to 35, which is another support area where buyers can be active. But overall, we know that heading into tomorrow, the market could be fairly balanced. And if we continue to see more weakness come into the Russell, then we could see a more extended pullback in the S&P as well. So at this point, we're going to be a little bit less aggressive on the long side. We're still going to exercise caution and be selective on any short setups. And the focus overall is still going to be on longs. But now we just want to be a little bit less aggressive on long setups, which means maybe we now wait for a better trade location, or we only take long setups where the real-time situation is really favoring the long side too. So those are the main ideas heading into overnight. I hope you all traded well, and I'll update you all tomorrow morning.